cater to different stages of the innovative companies. With respect to the ESG, I think it shares a number of obstacles with fintech. So if we tackle, for example, they are sharing basically opportunities and challenges. So if we speak about data privacy, that it's basically one of the most challenges, I would say, for the fintech companies. This also a challenge under the S factor under the ESG. So basically, this is how the fintech are converged within the ESG framework, and things should be resolved mutually, I would say.
Thank you very much. It's good that you mentioned the access to funding. You know, typically a fintech starts with family and friends and angel investing. That's what QDB plays an important role. And soon you will also be launching, I think, the first venture capital tech firm in the country, which is already fantastic news. So thanks for that. Abdul Hasib, again, from a global perspective and also the report. So obviously there is competition in this world and several countries trying to position themselves as an Islamic fintech hub. Is that important at all? And what can hubs do different to accelerate the success of Islamic fintech?
Yes, I think there's certainly competition at a national level, and I think that's to be expected. That's always the case in any market. What's really interesting and encouraging is, though, over the last year, we've seen hubs reach out to each other and have a much more collaborative approach. They recognize the levers they need to pull to be successful, and we're in a risk capital game when we're talking about early stage anything, especially early stage fintech. That requires scale. Scale is going to be global. That's just the reality of how companies are going to achieve the kind of valuations that investors are looking for. And therefore, the role of an ecosystem support that. Now, within an ecosystem, I had the privilege in 2014 to set up the Fintech Association in the UK. That gave us a lot of insight into how you develop a fintech ecosystem, what works, what doesn't work. And I use the UK as an example because it has a lot of natural advantages that it enjoyed, and that's predominantly why it's been in a leadership position for many years. There's quite a number of factors, but I'll focus on the important ones. So regulation. The FCA in the UK is still the only regulator, I believe, that has a competition mandate, which means they are not allowed to cease and desist what you're doing. They have to actively engage with them and understand what regulatory framework they fall in. If they don't fall within a regulatory framework, they have to actually understand how they can, or whether they need to fall within a regulatory framework, and then how best that is achievable. Whether that requires a new regulatory framework, such as the case is now with digital assets and blockchain technology, or whether they're allowed to just operate until they become systemically important, as long as they abide by KYC rules, AML rules, and protecting customers. Secondly, so regulation is really one aspect, and what's really interesting with the report that we see is regulation is really seen as an enabler by a lot of the fintechs that we talk to, and what they're looking for is regulatory clarity across jurisdictions. So I'm sure the gentleman either side of me can comment on this, but once you're regulated in one jurisdiction, you don't want to have to change what you do to be regulated in another jurisdiction. You would like it to be as seamless as possible, as close to seamless as possible. That's permissible within local differences. Secondly, capital. I think you raised that point. So access to capital is a challenge for any startup. Within Islamic fintech, that is an increasing challenge. What we're starting to see is some conventional investors now look at Islamic fintechs. And the reason for that is all of the groundswell activity that we see, and we've mapped 375 Islamic fintechs globally in the latest report, and that's grown from 100 the first time we did it in 2017. There is a momentum, there is a trajectory, and what we're now starting to see, starting one G's, and when you look at every market, those are common problems across all the OIC markets. I think the final one I'll touch on is talent. So talent is a key driver of any ecosystem. Now, there's many ways to look at talent, especially in the GCC context. Firstly, it's about developing homegrown talent, so giving opportunity to your graduates and workforce to join early stage companies, to learn, to grow, and hopefully to develop their own entrepreneurial journey. The second is to attract companies to the region. Now, early stage companies tend to be small, they tend to not have many people. So, getting an early stage company to come and put hundreds of people on the ground in jurisdictions in the GCC is not always possible, but, larger companies that are within the tech ecosystem certainly can provide that. So encouraging larger tech firms to come into a jurisdiction to then encourage more tech enablement, to encourage more entrepreneurship is certainly an avenue that can be explored as well.
Clear, I think, direction. It would make sense from that perspective in GCC to have uniform sort of regulation that you don't have in the UAE, fragmented regulation. Saudi come up with new